Good evening and welcome to the Accendo Trader Group. This is our stock market wrap-up for Monday, November 16, 2009. Our website is blog.accendotraders.com, where we put together effective video, technical analysis, trading plans delivered on a daily basis. As we say, our focus at Accendo Traders is working on trading plans. We do this to keep us disciplined and also to make sure that we know what's coming down the pipe that could affect our trades, like economic data, earnings, upgrades, downgrades, things that could affect our positions that we need to know about and prepare for the next trading session. Most importantly, having a trading plan allows us to be focused, disciplined, cut down our time, and give us time to spend with our family. So, the day that was. Well, once again, what have we been talking about for the past couple of weeks, and that is the inverse relationship with the dollar and the market. And the dollar continued to be weak, and thus the market went up. The dollar is making fresh new lows. And also, across the seas, Asian officials embraced or renewed their commitment to the economic stimulus. So we started off good because of what was going on overseas, and then again, the weak dollar hit new lows, and the market hit new highs. Economic data, retail sales for October was mixed, business inventories was mixed, but in the end, all of our sectors ended up positive for the day. The market ended up rather nicely for the day, and again, we had the S&P 500 settle above 1100 for the first time in over a year. Also, on earnings funding, we had lows. They matched expectations, not the driver for today. We had A&F upgraded. They have earnings tomorrow. Nothing on the downgrade side. Tomorrow on the economic front, not that much. We have some inflation data, but nothing really that's going to move the market. Home Depot and Target, you know, in the older market past, they would move the market, especially Home Depot and Target, but I don't expect them to move the market tomorrow. Right now, we're probably still, again, looking at what's the dollar doing and how does it affect the market. As we begin to look at the Dow Jones chart, first thing that's important to notice is that right down here, what do we have? An uptick in volume. And you know what have we been talking about all November, which is the lack of volume. Now, no, it's not above average, but it is a tick up in volume, which is somewhat an indication of sentiment. The other thing to look at is this. We've been saying that Dow has been leading us, making these wonderful, great new swing highs. And unlike the pattern before, usually once we got a red candle, we went down. Well, we're kind of bucking the trend. And also, this was in the McKee report. If you take the time, I'm just squeezing this down and shrinking this down. And this is the October high from 2007. As you can see, this was the beginning of the end. But if you draw your downtrend line, connecting the dots from the October over to here, and where we were coming into this week was right at the angle, the center of the angle, the apex, that's not the apex, right here in the corner, the wedge of the March lows and connecting the uptrend bottoms. So when you look at this wedge that we were in, this week was important to figure out what we were going to do. And what did we do? We broke above it. Now we need confirmation, and we would love to get volume on that confirmation, but that's still a pretty nice thing to look at as far as for our bulls. Now on the NASDAQ, what did we say? We said play the breakout. We say play above here and below here, and we are breaking above. Now we need confirmation. Just a little uptick on the volume here. Not above average, but we need confirmation. S&P 500, same thing. We said play a break above, and we did break above 1100. So that's certainly positive. Not as much volume here on the S&P 500. But overall, it was a good day, and I'm going to show you in a second that relationship with the dollar and the market. But overall, nice up day, nice uptick in volume. Matter of fact, let's go ahead and take a look at the internals. What we're seeing with our internals here is that, yes, we had an uptick in volume. Remember, yesterday's video was talking about how all the volume is going down, 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 down. So we did have an uptick in volume, and we have bullish breadth. We have a great number now for stocks making new highs versus new lows, and we have a great advanced decline. So All of these are great bullish indicators. Breaking out of the wedge is a bullish indicator. Breaking out of the consolidation is a bullish indicator. But we need to confirm that with some more volume and another up day. Coming down here, you can see that our NYSE new highs was pretty good. Oh, that's our NASDAQ new high, and here's our NYSE new high. So stocks are continuing to make new highs. Now, I said that I wanted to kind of show you some of the relationship between the dollar and the market, and you can see the market gapped up, the dollar gapped down. But right here at 12.15, when the dollar rallied, and we come up here at 12.15, and what do we see? The market crashed. And then when the dollar started to head down, what did the market do? Market started to head right back up. And then right here at 2 o'clock, when the dollar started to rally again, I'm going to slide over a little bit. What did the market do? 2 o'clock, the market started to head on down. So you can see again that the market is using as its drive right now the dollar. Now, the last thing I want to show you is just a couple intraday patterns to look for. This is really maybe something to look at for those people who like to do counter trends, and that is failures. Now, the market opened at 9:30 and took off, so you're really just hoping that you took advantage of this. And one thing here is that you see we failed, but the minute we got this rising 3 pattern and we confirmed we continue going up, then we don't have a failure yet. The big failure that you're going to see is, notice that once we hit up here to about 1030.85, that the market couldn't make higher. Well, once we couldn't make a new high, we failed to make a new high, and we break this intraday support here, all these candles were just kind of hovering right here. But once we break this support, that was our key to go in lower. Now, what happened? We came down, we went up. Once this candle comes down and fails to make a new low, then that is our reversal target, our counter trend, to go to the upside. Same thing here. We couldn't make a new high. We came down, but there's a better example. As we come over here, same thing. We couldn't make a new high. Once we break the candle's immediate candle support, the market tanked. Now again, this also correlates inversely with the dollar, but just want you to look at failures. Fail new high, fail new low. Same thing here. We pushed to make a new low, couldn't do it. This was our candle to get back in towards the end of the day. So now we're going to move on to the educational portion of our video using the book Trading in the Zone by Mark Douglas, Chapter 7, talking about the paradox of random outcomes and consistent results. Now, for the past week, we've been talking about that trading is similar to our professional gamblers. And that is the understanding that these random outcomes, not knowing what the market's going to do, can still produce consistent results. Now, in trading, marketing analysis, specifically technical analysis, allows us to find behavior patterns, because we believe, technicians believe, that given a similar situation, those traders in the market will do the same thing. Now, we understand that on an Apple trade at $190 today, tomorrow the same traders won't be involved in that. But the mindset of the traders in that trade will be. They're looking at the same patterns. They see the same things we do. And the difference is who's trading those patterns disciplined, or who's trading those patterns emotionally, giving up too soon or holding on way too long. So understanding that we can produce patterns, again, giving ourselves an edge, putting us in a situation where we can succeed because we can see the patterns by the patterns that we choose to trade and execute in our trading plan, allows us to get consistent results from our random outcomes. You guys know our partners. We've got the Futures Trading Room, and the link there. Go ahead and pause the video if you had to. They got a 10-day trial access for $29. So good that I stopped my own room and I really hang out in this room now. Put it in Accendo Traders so you can get the best rates when you sign up. The best futures brokers, intraday E-mini margin as low as $300. One of the advantages of futures. And again, put in Accendo Traders and you can get 20 free contracts. And of course, I've got the free day trading book that you can get from our blog. Just go ahead and click the download, and it will take you to the free day trading book. So come on out Sunday to our Jumpstart Your Trading Week session, 8 o'clock, 8 p.m. Eastern Time, on Bring Your Stocks. That I'll evaluate them for you, take them through my templates, and give you my opinions. Of course, trade at your own risk. Spending 5 good minutes. Remember, I've been talking so much about futures and advantage. Go to our YouTube channel and click on the video for how to get started trading futures. If you don't want to keep coming to the website, you can subscribe to the podcast. And as always, follow us on Twitter. I'll see you guys tomorrow. Trade at your own risk.